Stock market actually declined today after an interest rate cut of 0.25% by the Federal Reserve. So it's down from 4.75 to 4.5 as we speak. Now, they are actually also at the same session. They also share or give a projection of what is going to happen in 2025. And what is going to happen in 2025 has changed if you compare that to their earlier projections as early as like 3 months ago, right? So in summary, slowing down the pacing of an interest rate cut in 2025. And the new forecast for 2025 is only one or maybe even two max interest rate cuts from the current 4.5% to 4%. So you can see how this is going, right? It's probably about one cut is 0.5%, or there are two cuts 0.25%. And the thing is, for this round, we are talking about now in December, it is as per the market expect, which is a 0.25% cut, right? Just before the central bank of US, the Federal Reserve, had its meeting, and that expectation is met. There is indeed an interest rate cut today. However, the thing is, usually when there's an rate cut, you see that the stock market, continue to go up, but that is not the case. And taking into account the fact that the market has been hitting all-time highs for the past few months, right? And the thing about this, why they are projecting a slowing in the pacing of interest rate cut, is because if you look at inflation figures, now we're talking about in the US, right? Inflation figures remains above 2%. That is above what their target is. In fact, they've started these interest rate cuts when inflation has not even reached their own set target of 2%. But why did they actually start a rate cut anyway? This year, right? Is to meet people's expectation, because if you don't continue to have a high interest rate, business is going to suffer. And the stock market, what we see happening for the past few months, stock market reaching all-time high, would not have happened if they did not trigger that start of interest rate cut, about 6 months or so this year. And I always look at what is happening in the US, because the domino effect always flows to what is happening in Malaysia, what's happening to the market in Asia, right? So in summary, the reason that market was reacting, there was a sell-off in today's market, because stock market is always forward-looking. The market expectation is that because of what they can see in 2025, slowing of interest rate cut, so there was this overwhelming market sentiment or bullish sentiment that sort of being dampened after they say meaning the central bank of US, they say what they're going to do coming forward in 2025. But then let me tell you, there could be something that could throw a wrench or a spanner into the works for this, right? But in summary, for this part of what I'm telling you, is the inflation rate is still above their target. So they are basically having to juggle this very tight situation of trying to stimulate the economy, soft landing, no recession, still without really reigniting inflation now, because inflation now starts to bounce up, right? So, but this task has been becoming increasingly complex. However, this kind of dip could be a time, right, to actually buy more, when it comes to equities. Now, what I'm referring to, this could actually throw a spanner in the works, is because Trump is officially going to be US president again in January. If the stock market, the Wall Street learned one thing about Donald Trump's first term, is that the stock market is how Trump always keeps score. If you look at his campaign and all that, he always took credit about stock market rallies. He urged Americans to buy on the dip, and even he was threatening to fire the chairman of U.S. Federal Reserve, Jerome Powell, right? And he clearly do not, during his next 4 years term, he clearly do not want him to be known as, during his term, the stock market, actually fell or declined, or the economy fall into recession. But if you look at what he said he want to do, is pretty contradictory. a lot of what Trump tried to do is what tariffs, right? Imposing tariffs from China, Mexico, even Canada, right? And deporting all those cheap labor, from Mexico and all that. So these, and then tax cuts. These are actually not helping when it comes to you're trying to solve an inflationary issue. Now, just imagine, like, if it's going to impose tariffs to a lot of things that US exports into from China or whatnot, that tariff is an additional cost to what are the items or goods being sold. So this increase in cost is going to pass over to consumer, and that's what people refer to as inflation. So and obviously inflation, if it goes up again, right, it rebound, US Federal Reserve would have less motivation to continue to cut rates. When that happens, stock market will actually decline. So you can see the correlation here, right? So that is the wild card that everyone is looking for, right? All what he said he want to do is just music to the ears for a lot of Americans, but to the stock market, it isn't really stock market or investor friendly. And of course, other things like protectionist approach aim to bring manufacturing back to the US. But then, if things are made in the US, then basically the costs are higher, right? If it's manufactured in US than in China, and that cost is ultimately going to pass to the end consumer, and then they will have to pay higher prices, and that is what we call as inflation. We do not believe that Trump will tolerate a declining stock market, even if it is caused by what he said he want to do, the tariffs and all that. If some of these policies that if we start to implement that, and the effect of that is that it becomes a bearish stock market, I'm not surprised if you would start to U-turn, to do like a Uno reverse, right? Or pivot away from what he said he want to do, or even if he has done it, probably he will actually pivot away from that. So we think that what he said he's going to do should be taken seriously, but not literally. It's like I'm threatened, I'm threatening to actually want to hit you on the face, but am I really going to hit you on the face? Because I know that if I'm going to hit you on the face, there would be repercussions. And the fact is, and if you think about it, inflation is like a cancer, right? It seems to be like have cured, but then not really fully. Now it's rebounding. So it has always been, a nagging issue that is, just behind, always like haunting the economy. So this is something that every investor, including myself, managing for clients' portfolio, are actively watching this. This tariff thing is sort of a negotiation tool that Trump is going to use when he's going to negotiate like better terms with China, Mexico, and whatnot, right? As a threat, right? That is how I think it's going to go. And also bear in mind that we are approaching the final month of the year, so you would be these things called tax loss harvesting or tax loss selling. Now, this might not be too common in Malaysia, but in US, when you have a portfolio exposed to the international market, you will have this tax loss harvesting when fund manager or fund house or all these institutional investor would be looking to sell some of their stocks in a portfolio that is having paper loss. Why? Because that kind of loss can use to offset the amount of profits, like profit or capital gain tax that is owed on the profits they have taken. Because in Malaysia, we do not have capital gain tax, right, when it comes to investment. But in a lot of countries like US and all that, you have like long-term, short-term capital gain tax. So they have to pay tax out of their investment gains. But how to actually reduce the tax from being paid, right, is to sell off some or liquidate or even take loss of some of your investment, before the financial year end, to do that. So with this news coming in today, right, Federal Reserve, U.S. Central Bank is saying, they're going to slow down the interest rate cut going into 2025. Plus, this tax loss harvesting event is the reason why, the stock market decline, and we would have noticed, from today onwards, there would be some decline, shrink in the value, and that is the day-to-day or week-to-week, month-to-month volatility that you'll be expecting at least until January, when Trump officially becomes the president of the United States. Because if I'm the fund manager, now we are approaching Christmas time, and we have to do some tax loss selling, tax loss harvesting, and then hey, I'm not going to buy or invest in anything. I'm going to go for a break and all that, right? So That is what we would expect to happen. All right. So as it goes, we will update. I'd like to give you updates again when in January. So stay tuned for that.